Good afternoon, VV Nation. This is Glenn E. Tompkins Jr. Welcome to the live stream on YouTube. Trending Thursday. Glad that you're all here. I'm happy to be here. In the background, I have my super producer, Joey. Joey, say hi.
Hi.
There you go. So I'm glad that you're all here. We're going to get hot and heavy into this. If you're new to Trending Thursday, what do we do here? Everything we do here, we look at stocks that are making news. We use the power of the VectorVest software to delve down into the stories. And I'm going to let you know if some of these stocks are good to go or not good to go, ready to rock and roll. And I'm going to show you which ones are good long-term plays and which ones are trades. So if you're ready, I'm ready to get started. First thing we do every week, we use the VectorVest software and we get into what's going on in the market. So we always start off with market timing. No matter what, we always start off with market timing. So let's go to the market timing homepage, or from the homepage. If you're new to the software, we can get you a link to the software. Joey will type it in the room. Take a trial, but this is what you see when you first open up the VectorVest software, and it's unlike anything you see anyplace else. That is real and true. That's not me just blowing smoke where it doesn't belong. That is real. We analyze the market better than anybody else out there. So we're starting with what's going on in the market today. We'll look at our quick list. All of the major indices are down today. All right, and that is what it is. Today is not a panic day. Today is just a day where the market is going down. If you're a little bit more aggressive, play the market to the downside. Today is a trade day to the downside. But if you're a little bit longer term, sit on the sidelines, let your market timing keep you in the market. If your market timing is telling you to be long, manage the trades with the stops that you already have. Today is not a panic day. All right, just because the market goes down doesn't mean that you panic. Now, with that being said, the Dow is down about 1.5%, the NASDAQ down about 0.8, the S&P down overall about 1%, and our VectorVest composite is down almost 2% today. For those of you who are new, let me talk to you about what the VectorVest composite is. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently, we are tracking 8,176 stocks in the database. All right. Now, our one indicator, VVC, tracks the move of all of those indicators in one ticker symbol. So when we say we time the market, we look at the move of that VectorVest composite on both the day-over-day and week-over-week basis. So we feel that it is a better representation of broad market movement. All of the indicators, all of the indices are down. Let's move over to our color guard, which is our traffic light into the market. A lot of yellow in the color guard right now, which still means be cautious. All right, but there's a lot of green in the price column. Remember, the price column looks at that VectorVest composite. And when you see a green light, that means the price of the composite has gone up on both the week-over-week and day-over-day basis. Today, the market has gone higher, or the VectorVest composite has moved from 4102 to 4298 on a week-over-week basis, but it is lower because we have a down day, lower from yesterday at 4381. The data is mixed, so we assign a yellow tile. RT, this is an indicator that looks at the short-term price trend of the market, and it is cast on the scale between 0 and 2. When RT is above the value of 1, like it was yesterday, the market is considered to be in an uptrend. Today, it went back below the value of 1, generating a red light. So the market is back down in a downtrend, but that is just today. So with that being said, the buy to sell ratio, which looks at the overall health of the market, when I told you that we analyze the market better than anybody else, we actually have an indicator that looks at the health of the market. The buy to sell ratio, the canary in the mine, it goes under a couple of different names. But this indicator looks at the relationship of buy recommendations divided by sell recommendations. When the BSR is below the value of 1, we clearly have more sell recommendations in the software than buys. The market is showing signs of weakness at this time. All right, with all of that being said, a lot of yellow in the color guard. Let's move over to our market timing graph. I'm going to pull up the market timing graph for you, and then I'm going to pull up the market timing graph for me. Remember I talked to you about the VVC? Well, this is that indicator right here. We're looking at the move of over 8,100 stocks in one ticker symbol, and when it moves, we can definitely say that the market is moving. When it moves down, we can clearly say that the market is moving down, and if you are a VectorVest subscriber, we got our customers out of the market closer to the top. If you don't believe me, take a trial. Take a trial and read the nightly newsletters called The Views that we talked about during this time period. I ain't just making it up, and we have a footprint in the sand that backs up what I'm saying. We can't fix that and say, go back in time and say, oh, let's do that. What you see in The Views, our nightly newsletter, is what's there. So if you don't believe me when I said that, go look at the written data that we have in the software. Currently, coming off the March 23rd low, the market is coming off of that low, rising higher, pulled back a couple of times. But remember, when you're looking at the movement of 8,100 stocks, we can clearly see that the market is trending higher. If I draw a freehand line from the low, there's the market moving higher. I like that. Today is a down day, but are we still trending higher with this trend line? The answer to that is yes, we are. Looking at the MTI, the underlying trend of the market, we had moved up above one. We moved up above one again. All I'm telling you is right now the underlying trend of the market is back down. Look at that buy to sell ratio on the graph. Not above the value of one, so the health of the market is still showing signs of weakness. Prior to the pandemic, though, we were showing signs of strength back here. The underlying trend of the market was above the value of one back here, so it was up. Let's go down to the last indicator, the RT. Lets us know when the market's in an uptrend. And right now, we did peak above that value of one and pulled back today. But overall, don't get sullen. Don't get somber. Don't get melancholy. The market is still in an uptrend coming off of this low. So with that being said, let's talk about why we are the way we are. I'm going to close out of the market timing graph, and let's go to our first news article. Because we always start off with the market, let's go see what market things are moving the market. The Fed, to keep the rate steady until economy has weathered the COVID-19 storm. The Fed is doing everything that it can to keep us afloat, to keep us as strong as an economy as we can. COVID-19 has affected the economy adversely. The Fed is doing everything. They're buying bonds. They are putting money. They're doing everything that they can, lowering the rates, everything that they can to keep us afloat. Now, even with that being said, even though the COVID-19 has affected us adversely, we still have one of the strongest, if not the strongest economy in the world. And that helps us. That helps us, or it could hurt us. Because if the dollar is strong, it costs more money to buy our products. When the dollar is weak, more people are going to buy our products. But that's going to also tie in with gold, which is one of my stories today. So even though we're still one of the strongest economies, I'm still waiting for the dollar to really get deflation, to get deflated. It's not quite there yet, but as we get more into the earnings season, dropping the economy some more, which is going to happen. There's no ifs, ands, or buts about it. It's going to happen. That's going to start to be stimulus for breaking down the dollar and increasing gold, making gold move higher. So the Fed is going to keep the interest rates. I thought for a second that they were going to put us in the negative rates, but they didn't. We're still sitting at 0 to a quarter basis point. So they didn't lower it, but they are not going to raise it anytime soon. The Fed to extend loans to more cities, counties. So with all of this, cities, have you noticed that a lot of cities and states are on the precipice of declaring bankruptcy? Man, that's huge too. So the Fed is going to extend more loans to individual cities and counties. Central bank widens eligibility for new local government lending program, allowing more than 200 municipalities to participate. So I don't know where this is. This sort of looks like Brooklyn. It does look like Brooklyn. Hold on, where's that at? The majority of the Americas, they didn't say what that is, but that looks like Brooklyn. Hey, Jay, that look like your neighborhood? This might be my old neighborhood. This looks like it. Is Jay answering? That might be your old neighborhood, Jay. That definitely does look like New York. All right. In the last story I have on the market, Mnuchin says big companies should apologize for taking small business loans. I made a comment not too long ago on Trending Thursday, like companies like Ruth's Crisp took money. They didn't need to. But other companies like Shake Shack was given the money and they gave it back. But I like that somebody's stepping up and saying that, some of these big companies who were issued or extended these loans, they shouldn't have taken it. A lot of these mom and pop companies out there are struggling. And companies like, I'm putting it out there. Ruth's Chris, it was in the news. So it's not like I'm targeting them. They were in the news. They took the money. But I'm also going to tell the other side of the story where Shake Shack gave it back. You got that, Joey? Mm-hmm. Shake Shack. Make a song out of that. Shake Shack. Yeah, Shake Shack. Give it back. Hey! Anyway, so it's just interesting how somebody big up, somebody way up in the hierarchy is saying that some of these companies should apologize for taking the small business loans. All right, so these are the things that are shaping the market right now. I always try to look at things dealing with earnings, interest, and inflation. All right, inflation is not an issue just still quite yet. Interest rates are still being kept low. Companies are still making money for the most part. We're going to talk about some big companies that either hit or miss earnings. So let's go look at the market again in the software. Let's go back to the VectorVest software. Did I close it? Did I close that graph, Joey? Man, I think I did. Wow. No, huh? Yeah, you did. I did? Well, let's do it. Let's just do it this way. All right. Actually, no, let's go back to the viewers. I have the two indicators that I use in my watch list. I have the two indicators I use in my watch list. I use the SPY for those of you who are not VectorVest subscribers. And then for those of you who are, I use the VectorVest composite. So whether you're a subscriber or not, we can still keep on top of what's going on in the market. I'm not going to analyze them with our indicators. What I will do, though, is look at them on a graph. I'm going to right-click, view the stock graph. From here, here's the VectorVest composite. Remember, this is the movement of over 8,100 stocks. I have a 20-day exponential moving average, which is a good middle-of-the-road moving average, especially if you're looking to swing trade. I like that the composite went above the 20-day moving average. In this case, the spiders went above the 20-day moving average. What is it doing now? A little bit of sideways mumbo. Let's take off the last close. A little bit of sideways mumbo. What do? Right now, the market is just, as it was moving higher, it pulled back a little bit. That makes sense. That makes sense. What goes up must come down. And it was moving up nicely. A down day the day before yesterday, an up day today, a down day today, but not drastically falling. That 20-day exponential moving average still says it's okay. Don't panic. This is don't panic mode. Next, we have the RT, the short-term price trend of the spiders, still above the value of 1, so the spiders overall are in an uptrend. Watch volume, though. Let's bring up the VectorVest composite. Nicely above the 20-day exponential moving average. Notice that as the market or the VectorVest composite pulled back, where did it pull back to? Right to that exponential moving average. Bounced off again. Today is just a down day. So I really don't want any of you to really panic and start looking up and say the sky is falling, because it ain't. Today is just a down day. Today is a day that you allow your stops to manage the trades that you have. That's it. And if a stock gets stopped out today, today is not a day to replace a stock. Hopefully everybody in the room understands that. So those are my stories about the market. These are the two indicators that I look to back up what's going on in the market. And right now, the market, from the VectorVest composite to the spiders, are in an uptrend. Today is just a down day. Any questions, Joey?
What's the difference between 10 moving average, 20, and 40?
What's the difference between a 10 moving average, a 20, and a 40? The time frame. The smaller the number, the more responsive it is. I can take this same moving average, drop it down to a 10. Look how closer it tracks price. All right, the lower the number, the closer it tracks price. The higher the number, it doesn't track it nearly as closely. And if I change that from a 20 to 40, you will see that price and that moving average won't be nearly as responsive to each other. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.